How will your business survive the coming inflation? It's coming, and it might be a giant tsunami. So check out today's show, and we'll give you all the tips on how to survive it. Let's do it.
Salon owners are some of the most amazing people on planet Earth. The only problem is sometimes their hearts are so big and they give so much of themselves to their staff and guests that it creates unintended consequences. Our goal is to change the industry by elevating the way the rest of the world sees salons, spas, and barbershops and give it the credibility that it truly deserves. This is the Salon Owner Evo Revo Show.
Today's podcast is brought to you by Salon Scale, allowing you to charge by what you know, not by what you feel. Hey, what's going on, everybody? It is Jason Everett and Doug Campbell. What's going on, Doug? How are you?
I'm doing well. Yourself?
Dude, I'm doing pretty good, except for every time you turn on the news, you hear something about this dirty word called inflation. It's the bad I word. Inflation has been the hottest topic in the news for a while. I think the news always loves to give you something to be afraid of, but this is a topic that I really think deserves your time and attention today. If you are in a spot that you've been hearing about inflation, somewhere in the news, somewhere in the conversation with your guests, somewhere around you, do me a favor and type in the word inflation into the chat, because that is the subject of today, is what's going on with inflation. And I've actually got with us today an extra special guest, a good friend of mine, and the guy who literally wrote the book about inflation. Talks about how do you prepare yourself going into inflation, what do you do during an inflationary period, and how do you actually survive the coming tsunami that's happening with inflation. This guy not only has run incredible businesses, but also as a real estate investor has created lots of property and cash flow and real estate income, and then now is teaching people about how you can do the same and how to hedge yourself against things like inflation. Please welcome to the show, David Phelps. What's up, David? How are you, man?
Hey guys, great to be here. Thanks for having me on.
Dude, glad to have you on. I found out you just wrote that new book called Inflation, and I see it on the shelf there behind you, man. And I think, dude, timing of that book could not be better. This is third book, fourth book, 100th book. I can't remember how many books this is for you.
We're about five or six, I think now.
Yeah. Just five or six. Just five or six.
Well,
books.
yeah, but you know, I'm not John Grisham. You know, I'm trying to work towards him. It's going to be a while, but no, just yeah. I love to share experiences and wisdom, which we only accumulate through real life, right? Every one of us, you know, and it's just fun. So thank you.
Yeah. Well, dude, thank you for being on. Thank you for sharing your wisdom. If you guys can do me a favor and type in welcome David to the show, so you make sure we can greet him and bring him on. Now, again, David, we're talking about, like, look, you've been a business owner. You've been in real estate investments. Now you do a lot of syndication deals, and you help, you actually provide some functions as a bank, and you actually invest in a lot of different type of deals. And so I think it makes you really uniquely qualified as a business owner, an investor, and kind of everywhere in between to talk about this idea of inflation. Just so that everybody kind of gets the I don't know, say non-boogeyman, but like the non-news boogeyman, like the boogeyman of like, hey, stuff's going to get more expensive. Gas is getting more expensive. Things are getting more expensive. How would you define for us inflation and what that potentially could do for the future? Can you give us your definition of that and how that would frame out?
Yeah, well, inflation is really too much money, and you know, our currency is no longer backed by the gold standard. So any country can right. print or create as much fiat currency, in this case dollars, as it wants to, and that's what the Federal Reserve has been doing. So when you create too much money in circulation, which is what's happened, particularly over the last 2 years with COVID, then you got right. too much money chasing too few goods, and so when that happens, then the cost of those goods goes up because there's too much money trying to buy those goods. So that's a factor of what happens with inflation. And where it becomes a problem is, I think everybody here listening today, whether you have a business or not, but I think everybody here has a business that's listening to you. But yeah. on a personal side, just starting there is, yeah, go fill your gas tank up. All right, that's easy to see what's happening there. Your utility bills, your property taxes, insurance, food, groceries. I mean, everything is, in my opinion, just when I look at what I spend, is way over the current rate that the CPI or the government says, the Consumer Price Index. They say it's 8.6%, which is
the inflation's over 8 point. I think that was the current stat. I looked it up.
That's the current stat. That's current stat. Well, that's a 40-year high. We've been going along with inflation the last 2 decades at 2% or under. So it hasn't even been a word that people have heard about. And Jason and Doug, the reason why this means a lot to me is I'm not going to tell you how old I am, but I will tell you this: I grew up during the last round of inflation, which was the 70s and 80s. I grew up then, and here's how it affected me. I was a tennis player, and I had to buy my own stuff, like shoes. So shoes, like and the tennis balls, everything that I was buying was going up in price, and I had to go out and mow lawns to buy that stuff. So I had to mow more lawns to buy my tennis rackets, my shoes, and tennis balls. So I realized the cost of inflation at a very early age. Now I'm being a little bit facetious because back then it wasn't a big deal because I didn't have to support myself. I was still living at home. But yeah, as a business owner, as a consumer, we are facing the high cost, and yet for most people, their wages are not keeping up. As a business owner, your costs are going up across the board, and so
everything's going up at salon owners.
And so your margins are getting tighter, and that's where it gets scary, right? Because you can only feel like you can only push prices so much, right? I mean, everybody's pushing prices, but how high can you go? Now we have to think about who are our consumers that are buying our stuff, our services in this case, or if you sell products, or salon owners have both. You've got products and services. So your costs have gone up for everything. So your margins are getting tighter. How high can you push your customers? I mean, they've only got so much bandwidth. So see, it's a whole trickle down effect. It's not just one person's affected. Everybody's affected to different degrees.
Yeah, completely. Doug, what questions do you have kind of about what David sees is going forward here as a salon owner trying to take a look at this? What are some of the things you want to know about?
I think trying to figure out where your price points are, where you can push the market to. Because you get ahead of it, and then all of a sudden, the people can't afford to get, or they take you out of their budget, or they go to someone else. So, I'd keep your finger on that pulse. I think, the retail, the products that we sell is a little easier because it's a percentage markup over what we have to pay for it. So, that one has some kind of guide to it, but the service side doesn't really have a strong guide to it.
Yeah. So like every business owner, you have to look at your P&L. Where's your expense line? Where's your overhead? Are there areas that you can slim down your overhead that's not going to affect the quality of the service that you're providing? At the same time, you want to have your experience, which I know you guys talk about all the time. So what's your customer experience? Customer experience will keep your customers and clients coming to you to a pretty high degree because people care about their looks and their appearance. I mean, that's something that's almost next to eating food or a roof over your head. I mean, it is close. People are always going to care about how they look. And so if you're delivering that kind of experience and you're that kind of a salon owner, then you're probably less vulnerable than the average commodity out there. So don't, number one, just don't be a commodity. Continue to do what you're doing in terms of offering experience, high value, and connect with your customers. You got to connect with them. Make sure that the people that are servicing your customers are engaged with them, and it just really dial in on your customers right now because you want to keep them and have them coming back and not be looking elsewhere where they could quote get it cheaper, or if they just feel like you're a commodity, then you may lose some people.
Well, I think you bring up a really, really good point on that, David, is that this idea that, look, prices are going to go up. Like you said, we're at an 8% inflationary rate right now. So like the question becomes, have you raised your prices in the last 6 months or the last 12 months? Like number one, have you raised your price in the last 6 or 12 months? If you have, do me a favor and say we have. If you have not, do me a favor and type in and say we haven't, just so we kind of get an idea of who's paying attention to what's going on. But just know that if you've not raised your prices by at least 8, 10%, you're not even keeping up kind of with market value. But I love what you said, David, is that, look, if that inflation if it is coming, as that inflation continues to come and show up in the reality of being a salon owner, the question becomes, how do you make sure that people don't just go, well, that salon down the street is still at the old price, I'd like to stay there. And like you said, this is a game of how do you create efficiencies in your business? So where can you trim costs to help make your business still remain profitable and continue to double down on the service experience and the way in which people are interacting with you as a salon so they continue to build and maintain that relationship as they stomach those price levels. Doug, I think I cut you off and you wanted to say something in there.
Yeah, well, I think I appreciated the comment about increasing the experience because I have heard salon owners talk about, well, we need to give a discount for this, or they're getting into their clients' wallets and trying to go the wrong way with, because they're just killing their margins. They're not paying attention to their margin. They're trying to keep somebody there. I think that also leads to that desperation downhill roll of, now you're trying to keep up with how do I give more back? And then you create the expectation that they're going to get discounted because of the situation instead
Right.
of the experience elevated. So I really appreciate that,
Yeah.
David, for putting in the experience over the discounting or trying to operate from that fear side.
Yeah, you don't want to be in the spot where you're discounting services to help people out with inflation. Like that's not what we're trying to accomplish. We're trying to make sure that you maintain yourself as a leader in the community, even though prices are going up. I mean, like, right? Like that's the game of any business. I mean, David, do you have any other thoughts on how do you increase value of service, or how do you do that in ways that businesses can kind of, as they're having to raise prices? Any ideas that you have in that front of like how they can maintain that?
Well, yeah, number one, and you already said it. If you haven't raised your prices, you need to do so because, again, everybody sees it everywhere. So it's not like you're the only one that's doing it. I know. Again, you're all being very conscientious about your customers, and you hear the talk, but they expect you to do some kind of a raise. So again, as Jason said, right now is the time to do it because everything's being raised. So you're not going to be the outlier. So do it. Don't apologize for it. You
Great
can
point.
commiserate, but say, yeah, it's tough for everybody. But you've got a business to run, and if you can't keep the quality of your business up, you can't put food on your table. Then where are you going to go? So yeah, I just over and over again, and I, again, I don't. My hair in the salon needs are very simple, so I can't go in all the iterations.
No, I think to your point though I think you said something also that I think might be undervalued in there, but like, don't apologize for it. Mm-hmm. I think you said commiserate for it. Like I think there's a lot of people, and this comes up all the time. This is the number one question we get asked about raising prices. How do I tell all of our clients that we're raising prices? Because people want to send out an email and say, okay, everybody, we're raising prices as of the 1st. We're raising this price. Wow. And like what you said though is that's your apologizing for it. That's your like, I'm really sorry. We have to do this to you. It's going to be really painful, versus just saying like, hey, the price literally goes up when they come in, it's more. And the discussion is, yeah, it really sucks. The cost of everything has gone up, so we had to raise prices. If that conversation comes up, but you're in this very unique period of time where you're not the only person raising prices, everybody across the board is raising prices, gas prices are high, and allow that to be the rationale and the reasoning instead of it being well, you are the bad person for raising prices because you're the greedy business owner. I think sometimes that comes up, right?
And let's face it, some companies will try to find cheaper product, right? Cheaper products to use, or if it's food, or you go to the grocery store, there's repackaging and diminishing size, and people start to figure that out. What you want to do is you're servicing real people who care about the value. They care about how they look. Again, well, you want to maintain and kind of let them know without over emphasizing too much. But again, your quality, and you even mentioned there are cheaper products that we could be buying today, from I don't know, China. I mean, I'm just saying.
Yeah, well, I mean, to your point, you can go to a cheaper place to get your hair cut, and I think what I'm hearing you say is it's okay to let some of those people decide to go to a cheaper place.
You may have to, yeah.
Right. And I think that's the thing, right? Is like the bleeding heart of salon owners and spa owners and barbershop owners sometimes is like, well, I don't want to lose anyone, but there will be people who decide that now's the time they're going to start buying the generic product. They're going to get a cheaper service. They're going to do that. And that's okay, but allow the customers that are the right ones to you to rise to the surface. Yeah.
Yep, exactly. Because there will always be that tranche of people who want that quality, the experience, the products. They know they're getting top. They don't want to diminish that. So if you service them well, and again, remember referral sources too, totally. Word of mouth. I know that you talk about that all the time, but the word of mouth, that experience you keep high, that's also has a ripple effect to also help you during 100%. Times where people are constrained a little bit more in the pocketbook.
Yeah, and I don't know who needs to hear this, but I just want to say it out loud for the record. Even during an inflationary period, people who have money will still have money. Like, I need you guys to know this, is that if you just understand that there are people who will still have money through this entire process, they will continue to pay a high-end premium for services. And when you get focused on the lowest income people that are leaving, and you're worried that's everybody, it's usually not everybody, usually it's less than 10%, and you need to continue to keep your elevated experience so that the people who have money can continue to get their services. David, I want to talk about, we got to take a quick break. When we come back, what I'd like to ask you about, for those of us that are invested into 401ks, into the market, we have real estate, we have other business assets that we're investing into. What are some of the things that we can use to really make the most, if that makes sense, but make the most out of what's actually coming? How do we actually hedge ourselves against those things on the other side of being a business owner with other investments? All when we come back after this break. You good with that, David?
I'm good with that.
All right, we'll be right back.
Hey HPSA listeners, let me ask you this. Are you tired of not knowing what your hair color is costing you on every appointment and watching it chew up your profit? Well, with Salon Scale, we take the guesswork out for you. Using a mobile app paired with a Bluetooth scale, Salon Scale will tell you exactly what your color is costing you on every bowl mix down to the gram. As you mix, Salon Scale will also digitally store your formulas and track how much product is being used in real time, so you can manage your inventory, cover your expenses, and generate more profit in your salon. Use promo code HPSA10 to get 10% off an annual subscription. Salon Scale, the new standard for mixing color.
And that's another thing to be looking at.
Yeah. We were just chatting about what are the tools. We were just talking about Salon Scale during the break. What are some of the tools you can use to actually create more profit centers inside your business? And that's another amazing tool. Again, big fans of Salon Scale. We use something called a profitable back bar system that turns a tool like Salon Scale into more profit and revenue for your company. If you want more information on that, do me a favor and send me, or type in the chat, say profitable back bar. If you want to know how we're actually turning a back bar into a profit center, that's a great way, obviously, to hedge inflation, is to find other profit centers. David, let's talk investments. Let's talk real estate. Let's talk that stuff. And that's the stuff that like I get fired up about, because man, oh man, there's some goods and bads about inflation with properties and all this stuff. And, people are always like, oh, my property's gone up in value. Well, has it? Or is it just catching up with inflation? Like, what's going on? Talk to me about property and investments. And Doug, I know you're invested in the market, in the real estate market, and also the stock market. So am I. David, I'd love to have some of your advice on that.
Well, yeah, I'm going to speak primarily about real estate. I'm not going to go into the stock market, and that's a whole other area for people with other expertise. But I look at real estate as a tangible asset, really as what I call a currency converter. So here's what I mean by that. We're just talking about the fact that everything's going up, right?
Yeah.
Well, property, well-managed property, well-located, it's a currency converter, because as we have inflation, well, guess what else goes up? Rents.
Yeah.
I mean, if you're a business owner and you're renting space, you probably have seen that happen recently, if not coming up for your next lease renewal, the rents are going to go up. So if you own the property, then the currency converter is, even though everything else is going up, you're gaining more cash flow, more ability to continue to buy what you need to buy because of the currency converter. An additional fact is the value of the property will also keep up to some respect with inflation. We've seen that big time the last 2 years with COVID. A lot of properties across the nation have gone up 20% per year. Way abnormal.
Way more than inflation.
Abnormal. Yeah. Okay, but again, if you just had your money sitting in cash, which is like, well, that's safe, right? You have it in the bank, it's always there. But the problem is you just lost a lot of value if you had it in a currency converter like real estate or your business. Your business is another currency converter. If you have the two tied together, a business where you own the real estate, you've got a double benefit there, because again, you have the ability to have the price points if you raise your prices and rents go up if you own property, or if you own your property, your rents don't go up. Because why? You have a fixed rate mortgage on your property. That's the other benefit. So if you buy property that has cash flow to it, or use it as your business, you can finance it long-term, 30-year fixed rate interest rates that are still historically low. And your rents, or in this case, your mortgage rates, will not go up. So as everything else goes up, your payment stays flat, and eventually you pay it off, and now you've got a free and clear property. So these are some hedging opportunities that you have as business owners or as investors to potentially invest in real estate. We can talk a little bit more about different kinds. We were talking about that before the show, Jason and Doug, but I'll let you take the next questions from there.
Yeah, well, I think it's really interesting. To your point, and I appreciate you just pointing this out, like at a basic level, but it's really clear, is like, owning your building is a great way to like fix your rent, basically, if you want to do it. Now, Doug, you might have something to say about fixing your rent, because I think that, you should still be paying yourself, but there's other ways for you to transfer. And again, you talked about currency converter, like David, this idea of like, if you have a fixed rate mortgage that you have the exact same payment, you can still be adjusting your rent to match what the market is, inflation. And it's just a great way for you to be the beneficiary of making sure that as rent goes up, so does your income. And I think this is where it's a very different game as business owners we get to play, with having a business that goes up in value, real estate that goes up in value, other assets that go up in value. So as inflation continues to impact people, it doesn't impact owners the same way, unless you're sitting on piles of cash sitting around.
Yeah, correct.
Right. And I think that's been the safety net of the past, has been like, that saving is the way to go, like save for that rainy day. And I think, Kiyosaki, a mentor of mine and a guy you are familiar with as well, has just talked about, savers during an inflationary period get slaughtered because whether it's $100 in the bank or $100,000 or $1 million in the bank, that money is literally sitting in the bank, rotting away as inflation is happening, because the value of that is going down.
Yeah, there's actually a simple formula that you can figure out how much a dollar is losing value at different inflation rates. It's called the rule of 72. So I'll give you an example. If you see or believe the inflation rate is running at 8%, which it is today, it's actually above it. You take 8, divide that into the number 72, that equals 9. That means every 9 years, a dollar has lost half of its value in purchasing ability.
Oof. Every 9 years,
if inflation is running at 12%, well, I'll divide that into 72. That's every 6 years your dollar is decreased in value by half.
Wow.
So it gives you a stark realization as to why you don't want to be in asset classes that don't have the ability to keep up with inflation. Again, a business, one of the best ones to have. Secondarily, I'd say real estate, and you can also look at precious metals, which don't have a cash flow dividend, but historically, precious metals will keep up with inflation. That you can have a little bit there. But I think you have to be, in inflationary environments, you have to be careful of other equities that don't keep up with inflation. Oftentimes, I'm speaking very broadly here, but stock market equities, buying stocks, mutual funds, typically, as a broad rule, don't do well in inflationary times because interest rates go up as we've seen them do, and that means overall companies' profit margins go down. Therefore, generally, stocks overall don't do as well during inflationary times. Not giving you financial advice here, but I'm just saying, just be aware of those things. And when you talk to your financial advisor, or you do your planning, just hedge yourself and have some of your capital investments in the tangibles like business or real estate.
Yeah, great point, Doug. What questions do you have kind of on this topic and idea around inflationary hedging tools? What questions do you have around this?
Probably more of a statement on what he was talking about. Owning your own property is that you can control your. So if you're the landlord, I'm a firm believer in that. You treat your real estate like real estate 100%. And business, and that you pay yourself whatever the market rent is. However, if you get into a hyperinflation, that you've got that built-in cushion that you're your own landlord, so you can ease your increase or delay your increase until you got the other part of your business up. So I think that's just another advantage to your point of having real estate that's increasing in value, but also gives you the flexibility if your business is living inside of that real estate to give you some gauge where, if you weren't, say you're just doing a regular lease, and you're in a strip mall and it's coming up in August and he's like, hey, we're going up by $1,000 a month. You either pay it or you start looking for somewhere else and incur the cost of that. So that's just another reason why I really believe in owning your own real estate.
Yeah. Really, really important point. So David, let's take this a little further and go kind of like, let's take the biggest picture possible. Let's say somebody who's watching and paying attention to this, they own multiple pieces of real estate. They have, several businesses they're operating. They're trying to figure it out. Do you have any other big tips, best of practices to really be mindful of for this inflationary period we're heading into, that they can start to leverage and actually receive some gains and to do even better off through this period than other times?
Well, we have to be careful when we buy near the top of the market. There are always good buys out there. And again, one of the best purchases we've already said is if you can buy the right property for your business. So that's kind of a no-brainer. But again, it's got to be the right property, financed at the right rates. Right. If you're going outside of that and buying additional properties as investment, just knowing what to buy, where to buy is really key right now. 8 years ago, you could buy almost anything that was decent and it was going to rise up. Now, that being said, you can still buy good properties that cash flow well, even after you pay your normal operating expenses of the property, taxes, insurance, maintenance, repairs, etc., utilities, and you have to also add in whatever debt service you have. So you've got to make sure after all that is said and done, you still got a cash flow margin that's relative or respective of the price of the property. What I mean by that is, I got to talk California prices here for a minute, don't I? Well, you got people all over, but let's not talk about California.
Okay. I'm California. We can talk California.
I don't know. I can't relate to California. You're going to be in St. Louis this week. I'm going to talk St. Louis.
Yeah, sure.
St. Louis is a great mid-market, right? I can make sense out of St. Louis. I can't make sense out of California. So I can buy a good single family house in St. Louis today all day long for $150,000. Good tenants, good area, and I can finance that. Today rates are probably 5.5-ish, a little bit higher, but still, if I buy it right, and I can look at the rents, that I should have at least $300 per month clear after all expenses and after I pay my debt service, my mortgage, right? If I don't have at least $300 per month on that type of property, I'm not buying. So that gives me kind of a filter. Always make sure you've got the cash flow there, whether it's your own business or you're buying it for investment. If you can't get that kind of cash flow after all the expenses and debt service, not a good time to buy. You need to look harder or wait until
find
the
a
right
better
time.
deal.
Yeah. But there's always opportunities out there, and realize the sad side of inflation is that it does hurt a lot of people. There's going to be business owners, there's going to be real estate operators and owners who are going to go belly up. Why? Because their margins were too thin. They over leveraged, they overexpanded too fast. So again, I hate that for people, but you're the entrepreneurs. You either have the opportunity to buy additional businesses if that's your game, and or real estate if that's your game, or some of both. So look for those opportunities that come up, because the government's not going to save the day. They can't continue to do it forever. And as they push harder and raise interest rates, trying to beat inflation down, that's the game right now. There's going to be investments and businesses that go belly up. And if you're in a position to acquire those, you're going to acquire them at discounts to the market today. And that's where a great wealth transfer, is what I call it, will happen. So you be on the right side, you can magnify your own wealth and the cash flow.
This is really good. And I want you guys to catch this. Is like, if you're paying attention now, if you're paying attention to what's going on, to really what David said here, is if you look for the right opportunities to make the right buys, the deals that cash flow, the businesses that they didn't know what you did, right? Like they continue to decrease their prices to help people out and do all these other things. Those businesses are going to start to go under. So you might start to see other businesses around you that you can absorb right now into your portfolio. And if you understand how to make things profitable, you have a unique advantage right now over anybody else in the business marketplace. And I love what you said, David, is like looking for that opportunity to have that wealth transfer, to be able to say, this is the opportunity for you to grow, provided that you grow responsibly. Like, you're looking for those deals that cash flow properly, whether it's property deals, business deals, or other investment opportunities. If they cash flow right, now's the time to take advantage of those, because there's operators that are not operating very well. You probably know those operators in your town that you know are not operating very well, that are on the razor thin margins and they're not figuring it out. And you might be able to step in and take over an asset that, as we get to the other side of some of what's going to be happening, is you'll be able to, because you're able to run it now when times are lean, you'll be able to even run it better when times are good.
Yeah. Being plugged into your community, you have all of the opportunities, the leverage points of knowing how to run a great business. And if it's your game to potentially expand, yes, you can buy, a good location where the operator just, can't handle anymore. And I'd even be aggressive if you want to be aggressive, meaning I would actually put out some lead generation mailers in my community area. You can get the list and just send, and again, the right kind of letter, but just, that you're looking for businesses or salons in this case to buy something generic. If you want to be that aggressive, I'm not saying you have to, but if you're on the hunt, be out there in front, because when someone gets in trouble, the last person they're going to call is a business broker, because they know that they're not operating anything profitable that they can even sell typically. Right. So you put a letter out there, and you'd be surprised. You get a couple calls, and you can put deals together right and left. This is a great opportunity for those who are prepared. Again, I hate it for the rest of the country, but recessions have to come every so often. They have to. It's a flushing out of the excesses of what our government creates. It creates great excesses, exuberance in the marketplace. There's too much money out there today, too many asset prices going up, too many people running on over leveraged businesses and investments. This is what happens. Position yourself to be profitable, maintain, get yourself through the gap, and be ready to pick up the investments or businesses on the other side. You will do very well.
Dude, this is great. If you guys want to get more information from David, but by the way, Doug, if you want, I'd love to get your top takeaways. I'll give you mine in just a second. But if you want to get more information from David, you need to pick up a copy of his book called Inflation. You can go on to Amazon and just search Inflation and David Phelps, and you will get the information on his book. I know there's a ton of other resources and books that you have about freedom, creating cash flow, and other amazing opportunities, David. So please pick up any of the books that David has, but you need to get this book on inflation, because it will help you to figure out how do you navigate it, how do you buy these deals, what are some of the things you're looking for. David, you are a wealth of resource. I appreciate it. Doug, top 2 takeaways from you for today, and I'll give you mine.
I think the biggest thing is, having your business prepared for when this comes. So it's easy to run a business when everything's fat and the money's flowing, but whenever these times come, you're running it right. So then you have the opportunity to scoop up other businesses that did not run them right, or real estate that got over leveraged. I think that's one of my biggest takeaways. I think that run it right now so that you have you're in the position to have the opportunity later.
Yeah, I would agree with you. Running lean and mean right now when things are starting to get there. But I think the thing that kind of like the underlying topic that I got out of this was like, notice the tone of this conversation. It wasn't like a panic. Oh my God, we're all going to pay more money for all this stuff. It's like, just be smart. Do the things that you need to do to get yourself in the right position. Look for opportunities. And David, that's what I love. You're like the most chill dude. You're like, oh yeah, just looking for this and doing this. And like, you're still very calm through it, and avoid the sensationalism, avoid the gossip, avoid the drama. And I love what you said earlier, David, about feel free to like commiserate, but don't participate. Like that was, you didn't say that way, but that's how I heard it, right? Like commiserate, but don't participate. Don't buy into it. Don't feed into it. But be like, yeah, it sucks that things are higher, but here's what we're doing to do it. Run your business really, really well. And I love the other thing that was just snuck out right at the end is you said, let people know you're actively looking to invest and help people out and do it. And again, not like in a sharky sort of like, I'll take over your business, like I'm ready to buy you. But if you're like, hey, if you get in a financial trap and you're stuck and you want to make sure your staff stays employed, I would love to help and support you and be able to make something work, because you run a very successful business. And never forget that your success can lead to success other places when multiplied correctly. So David, thanks so much for being on. Great show today. I really appreciate you. And we have a private discussion with David inside one of our salon owner groups for our wealth building community that we do. It's going to be happening in just a little bit. So David, I can't wait to have you there as well. This has been tremendous. Thank you so much for being on today's show.
Thank you, Jason. Thank you, Doug.
Thanks, David.
All right, guys, grab David's book. See you guys next time on the next show. Bye for now.
Thanks for listening to the Evo Revo Podcast.
Today's podcast was brought to you by Salon Scale, allowing you to charge by what you know, not by what you feel.
Please subscribe, leave us a review, and you can always get more information, including show notes and the video episodes at Evo Revo Podcast.